All right, what's up, traders? What's up, tycoons? We're going to talk about natural gas, give you guys an update on oil. It's been a while since we've done that. Guys, this is still the most important chart. And if you've been watching some of my previous videos this year, this chart has really played out very nicely. I'm going to break down why this chart is so important. We'll go over this chart pattern right here, this chart pattern right here, this one right here. Okay, these three patterns right here are going to be some of the strongest and best patterns that you guys want to learn about and pay attention to, not just for natural gas, but in the market. Now, if you're going to be trading things like oil, UNG, cold, you need to really be paying attention to the futures. So we're going to start zoomed out on the weekly time frame for the futures. Then we'll zoom into a daily time frame, and then we'll cover UNG, oil, and cold as well. It's going to be a really great video. You'll learn a lot in this video. So be sure to smash the like button, subscribe to the channel so you don't miss any more of the content in the future. But as always, the content provided on this channel is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. Now, if you're new to the channel, I started a completely free newsletter for you, Investment Intelligence, giving out free, valuable finance and trading content. And I try to sprinkle in some, free trade ideas in there too. There's a website associated with it, so you can go back, read some of the previous newsletters that came out, see if it's something you want, or if you want to send directly to your inbox, just sign up for that using the link in the description. You can monitor it, read it however you want. Now, until May, right? Until the end of May, which May is pretty much over now. I've been letting people join the Discord for just $1 using promo code May24. This is where you get full access to all of my different analysis, different trade ideas I'm looking at, as well as many other valuable resources. And I'm letting people join for just $1 because we're about to do a big upgrade and release a lot of new features that I'm really excited about. And those are all going to be coming out starting in June is when I'll start releasing some of them. So you can get in now for just $1 for your first month. After that, you can pay your regular monthly fee. Now, this is the natural gas spot price chart. Okay, let's get into the meat of the video. This right here is the most important. Okay, and the reason it's so important is because of this horizontal line here, which is the level 2. Right, anytime the spot price of natural gas goes down below 2, natural gas should get an alert. You should be alerted of that. Okay. If there's nothing you learn, for this year, for next year, for multiple years in the future, just set an alert at the $2 spot price. And if we cross below there, you want to start paying in natural gas and looking at what type of analysis you can do to potentially make some money. And the reason being is because we recover afterwards every single time, right? We recover very quickly over here, recover quickly over here. It took a while to recover over here, almost an entire year, but still less than a year. And here it took a little bit longer and a little bit shorter than some of these other periods, but not as long as this period here. So, sometimes it stays down there for just a week, a couple weeks. Sometimes it stays down there for a few months, and sometimes it almost lasts an entire year. But what we've seen historically, the pattern is when it goes down below $2, we see a reversal and we see it get back above that $2 threshold. And it oftentimes happens with a fast move. Now, the reason it happens with a fast move is because of the first chart pattern that we're going to go over in today's video, which is going to be the plumber's pivot. Now, not too many know about this pattern. Not too many people have heard about it, but it's a really great pattern that you guys want to learn, especially, when you're looking for fast moves, right? And the reason being is because false moves lead to fast moves. So think false breakouts, false breakdowns. $2 is that level where we continually see false breakdowns that lead to fast moves, aka the plumber's pivot. And the reason it gets that name is because below $2, bears are looking to flush this to the downside, right? They're looking to aggressively short, and what do we see? Well, we see those bears actually get squeezed out. Okay, and so think about it. The bears are looking for a flush, and that ends up causing the plumber's pivot, right? Because they need a plumber. They're not able to get the flush that they want, so they have to make a call. And what is that call? Well, that call is to their broker saying, hey, I'm going to have to cover my shorts. So I'm buying to close now. Well, you have them buying to close, plus you have the bulls buying to open. And that's what creates these really fast moves, right? Look over here, down from $2, come up to 350, right? In a very quick amount of time, right? Look over here. Again, we have that period here. And this is where the bears get really over aggressive, right? We get the break, retest. That's what you want if you're a bear, right? And so now the bears are seeing this again. And what do we see? An even quicker move, right? Look at how short that we were down below this level. We popped up, retested it, and then we saw a larger move. Here, we got the break, retest, and we push lower, and we're not able to get the flush. And what do we see? A very, very rapid acceleration in price. squeezing the bears out of there, and while bulls are going long. And here, what have we seen again, right? We saw it over here. We come down, just barely dipped below it, right? Broke out. Very fast move to the upside, up towards 350. Here, we consolidate here a little bit for a couple, a few months. And then what do? Eventually, we break out, right? And that's what we saw is we saw this very rapid move here, in about a month or so, where natural gas went from, sub $2, basically almost right around $1.50, back up here towards $3 very, very quickly. And again, this is the natural gas spot price chart. This is the most important chart because I know that once we come down below that level, I know that there's a pattern there called the plumber's pivot that I can look up and I can look for the potential squeeze opportunity where those bears fail to get the flush and they need to make that call to cover their shorts. Okay. Now let's go into natural gas, the futures. Okay. If you're going to be trading Boyle, you're going to be trading gold, UNG, any of those. You need to be paying attention to the futures and what the futures price is doing. Now let's go over some basic concepts here before we get too intricate. What we're looking at is very simple. Old support became new resistance. All right, it's just that simple. So this was the zone initially we were targeting at this point in 2023. All right, when we came down here and we're starting to get some signs of bullish divergence, but more importantly, we also got the MACD crossover, right? So if we look here where we got our MACD crossover, you can see it's right when we're at the support level here of 196. And what do? Well, when this white line crosses above, that's generally a buy signal, okay? And we see that we go from $1.96, right, into the end of the year up here towards $4, for natural gas. So it was a very aggressive move over 100%. Now, or right around 100%. Now, we're still looking at that same zone above as our key level, right? And it's basically going to be about $3.50 to $4. Why? Well, because we know that that's an area of liquidity that pushed the market higher here, area of liquidity that pushed the market higher here. And then when the market did not find that liquidity, it pushed through very quickly. Now we came up and we see that there's still price memory in this area. And if we break out above $3 here, we're going to be looking at $3.50 to $4 as the next key critical zone. From a textbook fundamental analysis standpoint, what you want to see is you want to see a breakout of this area, retest, push higher, or you want to see some consolidation like we saw over here, right? A period where we're really just chopping around in that zone is very healthy for digestion until we create an imbalance that pushes us up higher. All right, now if we look here, there's a few things that I like. We'll start off with the RSI. Okay, so for the RSI, resistance, 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 breakout, right? And we even got a little bit of a check back and push up higher. So the RSI is oftentimes a leading indicator, right? Versus your MACD, which is sometimes a lagging indicator. And what we're seeing and what aggressive buyers do, all right, and something that I do, which it's a lot more risky, so you have to be aware of the risk, is you see these breakouts on an RSI, oftentimes that can lead to a breakout potentially in the candlesticks, right? Or in a specific chart pattern you're looking at. And what do we see? Old resistance, old resistance, old resistance, and now a fourth time, right? So for a fourth time, we're coming down and testing this yellow trend line here. If we can break this, right, we do have to be conscious of that $3 level here, but on a weekly time frame analysis, we still have plenty of room to run before we're overbought. And again, just recently, we got a MACD crossover. Look at how long that crossover lasted on the weekly time frame as we continue to just gradually grind higher. And we just got our crossover here, not that long ago. Now let's zoom in even more, right? Now you may notice that it says futures are up almost 10%. The reason it's up almost 10% right now is because this is a contract rollover, okay? And so, if you're expecting to see Boyle up 20% tomorrow, most likely that's not going to happen, right? And the reason is because, Boyle, UNG, they're futures-based instruments, but they also suffer from contango, and there's just lots of myths and facts about the different types of decay associated with them, right? Yes, there is volatility decay on top of that, but there's some myths about that too, right? A lot of people think if something has volatility decay, like these leverage ETFs, that you can't make money on them. That's not true. It just has to be in the right conditions, right? And that's a really good video. If you guys want to look that up, just look at exactly trades, decay, Boyle, UNG. You can just type that in and it should pop right up. A lot of people really enjoy that video because it's very in-depth over all of the myths and facts surrounding that. Now, let's get into our second most important chart pattern. Okay, so that first one we went over, all right, was actually the plumber's pivot. Number two was basically going over, the trend line break, using the RSI as a leading indicator for that. And then just understanding, the MACD as well, right? And so now, the third, all right, rather the third most important, thing I want you guys to learn is these large bases. Okay, when you see a big rounded bottom like this, they call this pattern the Kardashian bottom, and these are large bases. And in a bull market, in specifically just in the last year, specifically, we've seen nothing but these huge multi-year bases, multi-decade bases, or even multi-month bases. And they look exactly like this, right? You have your area of resistance, you get this nice big rounded bottom, and we just see these huge blowouts through those price levels. And this is a very bullish pattern, and oftentimes it can come with these explosive moves. Now, sometimes you get these false breakouts and we come back down. Yes, these things do fail. But if you think about it from a risk to reward standpoint, and if you're able to find these setups consistently, you're buying a breakout here, you're putting a stop shortly below the level, and then oftentimes you're looking for a 3-to-1 risk to reward ratio, 2-to-1, 4-to-1, depending on what your own risk tolerance is and risk management, positioning is. And, these things are really nice. Okay. And now natural gas hasn't been extremely bullish. Natural gas really hasn't been in a bull market. But this right here is a bull market pattern that you guys are going to love, along with the plumber's pivot. These false breakdowns that lead to very fast moves to the upside. That's another thing, right? Is we're seeing, big bases here, and then we're seeing false tops, where it looks like something's about to break down, looks like something's about to break down. And then what do you see? You see a very fast move actually back above support and even higher than there. Now let's go over UNG right here. So for UNG, all right, we can see it's very similar to how the futures look. Very, very similar. What we want to see here is we want to see, can this get back above 2050? Okay, back above 2050, we're going to be targeting 2450. But below 2050, we're going to see, what happens here ultimately, right? Do we start to consolidate a little bit, get a little bit of digestion? Remember what the weekly chart looked like on the futures, right? You really want to look at the futures for, your price action, and then use something like UNG or Boyle, perhaps, if you want to trade shares or trade options, or you can just trade, natural gas futures, whatever, fits your risk profile, right? But here, I wouldn't be surprised if we chop around a little bit, right? And price action isn't too clear until we really find out if we get that breakout on the futures chart, or if we get that rejection and head back down. So 2050 and $18, those are basically the key levels that we can dance between on UNG. When you look at Boyle, one thing I will point out with Boyle is I'll teach you guys another thing really quickly, and this is called the anchored VWAP. So this blue line is anchored, okay, meaning that I set it to a specific date, and I did it to the 40-70 highs that we had back in the very beginning of the year, all right, for Boyle. And so the anchored VWAP, the VWAP is your volume weighted average price. So basically the average buyer or seller is now in profits if they're a seller. Okay, so the average buyer is underwater below here. And once you get back above, the average buyer from this time period is actually now in profit. So now bulls are seeing green. You see we close here with the doji, a little bit of an indecision on what the next choice is, right? Does the average buyer start to sell and take profits at break even now and push price lower, creating an imbalance, or is the gas turned on? And we can see the gas was turned on here for Boyle. We came exactly up to this 2440 level right here that we're looking at. That's where we opened up, and you can see we had a big red candlestick 2 days in a row and a little bit of a bounce back today. But look at where we're bouncing. We're seeing that the average buyer from this $40-70 high, is now buying once again. And we're closing here right at resistance, right at our level of 1977. We're just 4 points away from there. Above there, you're going to be targeting 2310 and 2440, all right? And above there, we have basically $30 and $32 are the next price targets. That's what I'm looking at in Boyle. If we stay below 1977, we really want to stay above that anchored VWAP. So remember, anchor that VWAP to the date in the beginning of the year when we topped out at $40.70. right? If we start trading below there, things aren't going to look good for Boyle, right? And that's going to be a sign that sellers are back in profit, the average bull is back underwater. And if they've been underwater for the entire year and they missed their chance to take profit, there's a good chance you could see panic selling. All right, so keep that in mind. Now let's take a look at cold, and cold is something where you'll basically see the inverse of what we've been talking about today, right? And what do I mean by that? Well, we have old resistance, right? Became new support over here. And this is our target zone back down here. Again, looks very similar to that futures chart. We see a large base right here, except this time it's more of a rounded top versus a rounded bottom. And what do you see? An aggressive flush to the downside here. Remember, cold is going to be that inverse Boyle ETF. And so you're going to see those move in separate tandems. This is also an inverse J hook pattern, right? Where the J hook gets its name from obviously looking like a hook. It's an inverse. So this is what a regular J hook pattern would look like, kind of like what we saw over here, right? Where you have the large base and then you just get this move to the upside. That's the pattern that we really keep continuing to see. And the J hook has really been the pattern of 2024. Now, hopefully you enjoyed today's video. If you did, I put out newsletters. I try to push some out either on Wednesdays or Sundays, going over free valuable finance trading content. And I also try to sprinkle in some free trade ideas. Link in the description to sign up for that for free. You can join the Discord. Remember, promo code May24 will get you in. It expires in May, at the end of May. And that's because we got some new features and new packages that we're rolling out in June that I'm really excited about. You guys will be seeing those shortly. And if you enjoy the analysis in today's video, but you feel like, it's a lot to digest, right? Or maybe you have a lot of questions and you need that one-on-one personal interaction. I do lots of coaching sessions all the time. You can hit me up in my inbox. Just email me, zachlytrades@gmail.com, or I have a Ko-Fi page where there's a link in the description. You can click on commissions, and in there you can directly book a 30-minute or a 1-hour coaching session. Yeah. Thanks for watching. I'll see you guys in the next video, and I'm out.